All right, let's go. We got a bullish market today. Finally, we got the bounce that we've been calling out. We got that bounce, right? Pretty violent rip higher too. Also, we got a pretty violent rip. I think it was due. It was technicals, but let's go over first. Why are we getting this rip higher? What up? Yeah, what up, Slime Z? Let's go. Right, and I know the bears. Oh well, it's we're hitting resistance, but let's go over. First of all, the Fed paused. Okay, the Fed has paused. You guys can see it on TikTok now. You can see I want to make sure you guys can see the actual chart. So when you see an argument, right, I'll pull up the chart and show you whether people are just reiterating nothing. Anyways, Fed pause, right? We got the Fed finally paused. Oh, but he might hike again. Okay, sure. I don't think so. The bond market doesn't believe it. So we got the Fed pausing. Okay, we got lower bond rates. Let's go ahead and look at those lower bond rates. The 10-year is the benchmark rate. Collapse, right? Not I'm being a little exaggerative. They didn't completely collapse, but this is the pause, right? This is the pivot from the Fed. The Fed pauses. The Fed was actually more dovish. As much as people say, oh, he was so hawkish, he was pretty dovish, and the bond market reacted. And this is actually the cut. I said, hey, are these rate cuts? Did the Fed just cut rates? Yeah, they did. They cut the bonds, right? Now, it's not a real rate cut, but after the speech, bond yields dropped 40 basis points, right? From the highs. We're at 5%. Now we're at 4.63. What does that do? Well, the lower the rate, the lower the bond yields, the higher valuations on stocks, because they price the cost of capital into the future. So if the cost of capital is down, then stock valuations go higher. So that helps the rip. We also have a lower dollar. Let's go to the dollar, lower dollar index. Now it hasn't fallen off yet. Okay, this shoe has not dropped yet, but the dollar is struggling. If we go to the RSI, it is falling. The buying pressure is falling. So we got a lower dollar. That also helps. Okay, that's going to help a little bit. Well, what else do we have? No recession. No recession. Let's bring up the data. Let's show the data. And we have more data, but there's no recession here. We are not seeing recession. GDP was pretty strong in the last quarter. And I want to show you guys on let's see, here we go. Here's our macro for the day. Here's our macro right here. Let me bring it on TikTok so you guys can see. I don't know how hard it is. There we go. So at the top, basically at the top here, we have, this was today's data. Now the real employment data comes out tomorrow. So we'll also be going over that also. That comes out early in the morning, I think 8:30 a.m. Eastern time, right? But what we have is higher production, right? So more productivity. You can't have inflation of productivity. Well, you can, but as long as productivity picks up, it eats away the inflation narrative, because the output of goods and services per hour worked is going higher, and that's been ramping up. So more productivity, that's a sign of a strong economy. Okay, at the bottom, what do we have here? Unit labor costs. So labor costs are actually starting to peak and roll over on a year-over-year, month-over-month basis. They're coming down. This is the actual quarter over quarter. Now this could get revised. Okay, this could always get revised, but for the most part, the market is moving higher because you have production up higher than estimates, right? Higher estimated production, productivity, more goods, more services being produced, and you have lower cost of labor, right? Now that could be revised, so keep your eye on that. But for the most part, yes, those are the three reasons. Well, there's more reasons. We're gonna go over that. TikTok. No, we'll move this out of the way so you guys can see. All right. So yeah, that's what we have. What did I just say? So we have, let me get back to it. Fed pause. Bro, get out the way. Fed pause, lower bond rates, lower dollar, no recession, pretty good, lower cost to supply employment, lower employment costs, higher production. Okay. Also, decent earnings. And we're going to get Apple earnings. That's why we're here. We have them in about 7 or 8 minutes. I'm not going to do the earnings call, but we are going to we're going to go over the data. We're going to go over the earnings for Apple. Those are the most important earnings. So what do we have? We have EPS. Do they beat EPS? Do they beat revenue? They need to beat revenue. We really need Apple to beat revenue. Number 2, we have margins. How are their margins? Are the services, what are the segments? Are the services going to be pretty well? I think services do well. Maybe their MacBooks are down. Maybe the iPhone. What does China look like? So we have a lot of segments we got to look at. And also you want to look at guidance. That's going to be the biggest thing for the overall market. Where's earnings guidance going into the first quarter of next year, right? Next, the end, and we've been talking about this for a while, the end of mutual fund selling. Okay, mutual funds, $32 trillion industry. Let's go ahead and go to SPY. $32 trillion industry is the mutual funds controlled by JP Morgan, controlled by State Street, controlled by the big guys, right? The big asset managers, and they're done selling. The selling pressure is basically over, right? Now, if you get a black swan event, great, we got more selling pressure. But for now, that's a lot of that. Their tax loss harvesting is over because their fiscal year ends October 31st. All of a sudden, what do we get? On the 1st of November, boom, big buying pressure. Okay. And rates are down too. So you put all these together, right? Fed pause, lower bond rates, lower dollar, no recession, decent earnings, seasonality, markets higher. Year end Santa Claus rally. Still calling it all-time highs. I don't know about all-time highs this time, but we're definitely moving up. So we have those Apple earnings. We'll be looking at that going forward. Now look at the bond market. What have we been saying? This thing is going to gap up. It's going to explode because of the bullish divergence. I'm on the trade. Okay, this is the trading one. Let me switch over to the normal. Let's take off this. We want to take the extended trading hours off. Actually, no, let's show the bond market trading pre-market. So we're looking at TLT, right? The reason we want to know about TLT is because TLT is the long bond ETF. You see in after hours, in pre-market, it exploded, right? After all the, because labor costs are down, because yields are coming down, right? Well, yields are coming down directly because TLT is up. Bullish divergence, what does that mean? What it means is there's a lot more buying pressure back to the daily chart. Okay, this is a technical term. This will all be in the course when it comes out. The technicals, the fundamentals, if you're new, the technicals, the fundamentals, the macro, putting it all together. You're not going to be perfect, but you want to have as much information and knowledge as possible so you can carve out your path to wealth, to better wealth, right? You might make mistakes and lose a lot of money, but at the end of the day, it's all about education, getting better, and then executing, right? So what is bullish divergence? It's when the RSI, the buying pressure, is starting to climb. This is your relative strength index. Strength is picking up, right? And also we have a chart. Okay, this is not just backed up by the technicals. Let's look at the actual fundamentals here. Okay, where's the chart? I think I put this. Where did I put this at? Come on, let's find it. Running out of time here. See, this is not good. I gotta have this stuff. I need somebody to have this ready for me right away. Come on, where you at? Okay, here. I think I found it. It is the chart of bond inflows. Here it is. How do I share this? Okay, yeah, let's share it right here. Okay, so you have bond inflows here. I'll show it on TikTok first. Okay, these are inflows, all-time high, all-time record high inflows for the bond market. YouTube, here you go. I'm going to show it on YouTube. This is kind of tricky, right? We talked about this yesterday. All-time high record of inflows into the bond market, right? Everybody wants to buy some bonds. Why? Because yields are at a high rate. You're going to yield a lot. Rich people are going to make a lot of money, right? If you have like $1,000 in the bank, that ain't going to yield you nothing. But if you got 10 million, 100 million, you're making a lot of money every month just by putting it in the bond market, right? So that is fixed income. That's a fixed income market. This will be in the inside of the education whenever that comes out. So all-time record inflows into the bond market. People are piling in there. If we look at 2020, that was 2020 showed a lot of inflows into checkings and savings. That's in green. But when it comes to markets, because this is cash, nobody wants to hold cash, right? When it comes to markets, you didn't have much U.S. Treasury inflows, which is the light blue area. Then it got bigger. Then it got bigger in 2022. Why? Because you're thinking about a recession. And then you go into 2023, biggest inflow of U.S. Treasuries for a long time. Record inflow of U.S. Treasuries. Okay, that's what we're looking at. Now, what does that tell you? That tells you that this is real buying power. Buying pressure from TLT, from the bond market. Let's pull this down a little bit. Make sure that's visible. Okay. So what does that mean? Capitulation. You're getting capitulation. You're getting bond inflows. If this continues outright, what you're going to get is rates coming down even further because they're directly impacted by long bonds. Long bonds go up, long rates come down. So if 10-year keeps coming down, this will be a vicious Santa Claus rally because the dollar comes down also, as long as oil stays pretty tame. And oil is pretty soft at the moment. It is pretty soft. This is going to be a big look at this. Was oil at the beginning. So far, oil's started the month low, ended high, started low, ended high, started low, ended high. This time it started high, ended lower. What does that mean? The next CPI print coming in November is going to be pretty nice. I think investors capitulate even stronger. You got Cybertruck coming in. You got the Bitcoin ETF coming in. Risk assets are set to go higher because rates are down. Let's go bull market. All right, before we miss Apple earnings, we went over the bull market case. Let me pull that up for you guys. If you got questions, throw them in the comments while I go ahead and pull up, make sure that we don't miss these earnings. Yeah, Santa Claus rally. You know, we're about to get through the first leg of it. If we get through this Friday higher, this is a Santa Claus rally. Oh no, do we miss it?
To what we're witnessing in treasury yields, and it's not ironic. It's
Not
actually
yet.
what history teaches us about markets. That the day that the GDP print came out was the top for yields. That was the actual near-term top for yields. Yields fell from that.
Hey, that's what I said. GDP, when it came out, yields didn't make a new high. Remember this? Yields never made a new high. That's when I was like, hey, yields have peaked, because when GDP comes out hotter, but they didn't respond, well, that's a pretty clear cue that's a pretty good cue. Okay, we got to go to the 1 minute chart here, extend trading hours. That's a clear cue that's interesting. This is Apple. That yields have peaked. They're not responding anymore. They're not responding to strong, hot data. Okay, that's sort of what we're looking at here. Okay, I'm going to put Apple here. I'm going to put earnings up here. Big rally. Yep, that's right. See if I can make this look even on both sides. Yep. Okay, I'm going to put this on pause for now. All right. So what up, Carbides? What up? Shout out to the chat. Earnings this hour. Oh, we got Expedia, Coinbase. Ooh, Coinbase, Carvana. It's going to be interesting. Bitcoin ETF coming online. Let's do the shout out to the chat really quick. Let's go. Bull market rally. We've been waiting for this, right? Oh, you're always hyped. Well, yeah, I'm hyped up because the market goes higher. Oh, no. Is this Apple? Are we about to miss it? Apple earnings. Here we go.
Report and all these earnings this afternoon. Should investors believe that this is solid?
Yeah, I do. I actually think we are set up for a rally into the end of the year. We've already had a couple of days, nice days. And I think the laggards are going to likely lead us, which we saw today, right? All the tax loss selling companies and stocks that got kind of washed in that whole theme. They really exploded today, for sure. But the reason I'm positive really is because the data today was really the sweet spot. For the Fed and for what we want. We want inflation to come down. We had unit labor costs come down. We had productivity, the best in 3 years. And we also know PCE has also been coming down. So inflation is doing its job in terms of coming down. Still have progress to go, but it's good. And then growth. We're not growing 4.9% like we just grew in the third quarter. We're going to slow, but I think we're going to be able to do 2%. And that is good for earnings.
Yeah, we're going to
slow. By the way, earnings have been better than expected.
Yeah, we're going to slow. I agree with her. Anyways, we'll leave that up there. What do you guys got here? Tigger Media. What does bullish divergence mean? Went over that, right? Buying pressure. It's a setup for, it's just like, it's a setup to move higher, basically, on the technicals. We saw that on the S&P too. So you're always going to get the rebound. Are these it?
Today, is that encouraging?
Something like that. And
Okay, not yet. All right. Trying to go through these, make sure we don't miss it. We can always rewind anyways. Divergence can also apply to the moving averages. When they diverge, it displays price trending up or down. Right now, there's a short-term EMA divergence with SPY, for example. Great call out. So also you can, that's why we're, technicals are important too, because you can see ahead of time where the pressure is at, the moving averages. When you see a shorter term cross above or below, it's going to give you an indication. If it's crossing above a higher time frame moving average, then you're getting upside momentum. If it's crossing below, you're getting downside momentum. Now, when you preface that, or when you add that and layer it to the RSI, that's where you really get the advantage. You layer that to the RSI, you layer that with the, the market macro also at the same time. What Apple is going to announce today. So in other words, it's a change of trend to the upside. Yes, for a bullish divergence. Yes, it is. Tigger Media. You'll like the, I think you're going to benefit if you're interested. Oh, wow. I didn't know I was hosting on Twitter. If you want to, I guess that's new. Yeah, if you want to learn more about the technicals, we're gonna have that coming out by the end of the year. Just, I mean, some people don't care. It's whatever. It's gonna have the full package. Hopefully, it does not take the market down. Yeah, we'll see. I think the market was more concerned about rates. I think they just need to meet EPS. Okay, EPS is not as important. I think the market wants to see revenue growth. The market wants to see guidance, obviously, and then where are the margins at. So we'll see. But more so when yields come down like this, I mean, your valuations are going up. Future earnings are going to go up automatically. And you're getting a bounce in the overall market, right? And oil's down and the risks are dissipating. We'll see. All right. Yes. I wish this would just show up on the side here so I don't have to click on it. I wish it would just show up. I'll try to get used to it. Yes, when the RSI makes higher lows and price remains steady, it drops. It signals a reversal in price. So yeah, it signals a reversal and you get the divergence every once in a while. Look at Apple's last minute move. Is it moving? Okay, here's our after hours. We're in after hours now. Here's Apple. You can't see it obviously on. You can't really see it on YouTube because you just look at your own charts. Because I can't show both at the same time or else it won't show the volume. We'll look at it. We're almost out. All right, here's Apple. This is the after hours movement. We'll see if we get a big move. Here it is.
30 cents per share. That's ahead of expectations.
Started.
hold on.
Paramount Global.
10 seconds
Those
back. Let's
results
go.
are out. Julia Borsten has the numbers. Julia.
That's right, Morgan. Paramount bidding on the top and bottom line with adjusted earnings of 30 cents per share. That's ahead of expectations of 10 cents per share. You see the stock.
Did we just get played? Golly, just got played, bro. I thought that was Apple. All right, I guess that's not
Global
Apple.
ad market and lower political advertising and licensing and related revenue did fall 12% due to the Hollywood strikes. But here's the key piece here, and this is what's driving the stock so much higher. The direct-to-consumer.
Man, earnings are still pretty strong, though, in general. Earnings are strong. All right, so back to it. Look at Apple's last-minute volumes. Yeah, we'll see how that comes out. You mean like the stock price, or are you talking about their unit volumes? Those are going to be an interesting. Did you add to your link position? I added a little bit. I actually rotated some ETH because Coinbase is charging such a high fee just to trade. Okay, is this Apple? Don't trick us again. Come on. It's charging such a high fee. So I just rotated some ETH into Link. I think it'll pay off. I could be wrong, but that's my view. Who's this earnings alert? Come on. What else do we have here? It's 4:30, I think. 4:30 p.m. Are you saying that we're too early? Are we too early for Apple earnings? Maybe I'm too early.
Julia, thanks. Let's travel over now to Courtney Reagan, Expedia and Booking Holdings.
I mean, typically who's this? Expedia? Oh, they beat too. Look at it's still beaten. Apple isn't going to be at. Isn't Apple going to be at 5? Isn't that the earnings call though? Are they really doing? They're not going to release the actual earnings till later? No way. I thought it was just the earnings call that they're waiting on. If that's the case, well, I guess we're early, extra early. Well, hey, most of the S&P companies are beating. FactSet usually has all that data. Expedia just beat though. We got Expedia beating expectations. We have Paramount. Man, oh, there goes Apple. I don't know. I feel like earnings have to be coming out right now. And then I mean, I could be wrong. Sometimes I'm just plain out wrong. Starting to move up. Maybe they released it at 4:30. And the call is at 5. Usually they release it like after hours at some point, and then the call comes like 30 minutes later. All right, so let's see. It is, would you say 4:30? That is. I mean, I guess we got time. It'll pop up. We'll just talk till then. Oh shoot, let me plug my computer in before it dies. We'll listen to these guys, see what they have to say, and then look at some more technicals.
Couple of quarters. So, but you know what? Services is on fire, right?
Yes.
And that's a big part of our economy. And by the way, earnings are coming in just much better than expected. And in my mind, stocks follow profits. If they're going up, the market's going higher.
And you think it's going higher. Remember that Skyworks Solutions earnings are out meantime. Christina Partsinevelos has those numbers. Christina.
Yeah, Skyworks presented a mixed report, $2.20 adjusted. That was a beat for EPS on revenues of $1.22 billion. So that's roughly in line. Keep in mind, Skyworks is a key component supplier for Apple. And what is happening is their Q1 guidance is falling a little short. Q1 EPS came in weak. The revenue guidance was extremely light. And so that's the reason why you're seeing the stock down about 5%. So again, Skyworks beat on the top line, EPS, revenues in line, but guidance fell short.
Okay, and of course, we are awaiting those Apple results, which should be a little bit later this hour. Christina, thank you. Dropbox earnings are out.
Okay, they're coming a little later. Yeah, Roku, Dropbox. Look at these. Everybody's beating earnings pretty solid. Dropbox, EPS beat.
That's coming in at 56 cents adjusted versus 49 expected. Revenue also beating $633 million versus $629 million. That is single digit, 7% year over year growth. A few more metrics I'll give you. Paid users, slight beat here, as well as ARPU.
All right, we'll look at Dropbox up. We'll look at Roku. Roku is absolutely exploding over the past couple days. We'll come back to we'll come back to the earnings. Who is this, man? They just keep we'll just rewind it. Live Nation. I don't even know who that is. All right, let's look at some technicals as we prepare. Let's pull these up a little bit. Put this over here. Okay, yeah, so we Roku, yeah, Roku's up big. What is Roku up? Roku's up 36%. That thing is moving. Are we going to see a second wave of FOMO as we were talking 2 months ago? Yeah, I mean, I think we're seeing the FOMO right now, bro. Look how much the S&P is up. Let's pull it back a little bit. Sorry, I'm going to have to pull this up. I can't see. All right. So we're getting the FOMO, and really it came down to interest rates and the Fed pause, right? You typically, when the Fed does pause, the markets rip to all-time highs. Not typically, but this happened the last time we had high inflation. Regional banks are ripping. Okay. Yeah, bro, the market just wanted to see. How many times did I tell you guys the market, and maybe it's not over. Watch tomorrow. We sell off down to all-time lows. No, I'm just kidding. But the market wants to hear the Fed pause, and it's not just, he's not going to say it. It's just the communication, right? He didn't say anything about data dependence, which was a change of character for the Fed. If he didn't mention data dependence, I think what he's saying is, hey, we're done. We're done raising rates. There's enough progress. So the S&P is up 5% from the lows, 1, 2, 3, 4. We're going to be due for a pullback at some point. Of course, as always, we're going to have a pullback. Maybe we fill this gap and then continue higher. But for the most part, the macro headwinds are starting to dissipate. The war is not making oil go higher, like I said. So we're looking pretty solid. I think we do see the FOMO. You missed it, Asan. I think you missed the opening when we had talked about all the catalysts, which is the Fed pause, bond rates coming down, lower dollar, no recession, decent earnings, seasonality. The mutual funds are done selling, $32 trillion industry, and they're buying back, obviously, literally on the first, boom, big buying comes in. The volume starts to pick up in the S&P. Okay, you see the volume start to pick up. It's not tremendous volume. It doesn't mean they're all going to buy at once, but what it does tell you is things are changing for sure. All right. Who is this? Any earnings yet? Awaiting Apple results. We're almost there. If we miss them by a second, I'll just rewind it anyway. Okay, so got that. Regionals are ripping. If you're familiar, if you're wondering what are regionals, you want to check out KRE. KRE, ooh, yeah, they're moving. KRE is moving. The banks, financials have been leading the rally. Not leading, but they've been pretty strong. So you can look at XLF. XLF, from what I've heard, I don't know if it's true. XLF is up from the lows. Yeah, they're up. They're moving. Let's see. 6%. I mean, they don't move much, but let's say is JP Morgan moving up? JP Morgan's up a little bit. Yeah, KRE's up though. KRE's definitely up. Anyways, let's keep our eye on, oh, Bitcoin also got to 36K last night. 36K last night, so we're moving. Made 11K this week in Apple calls. Congratulations, ugly boy, 239. What a funny name. Let's see. What else we got here? Hey, you guys can move to, or we're live on YouTube if you want me to see your comments. I cannot see all the comments all the time. Keep the sound on. Keep the sound on. Well, I have other viewers too. So Apple earnings call at 5. Yeah, I'm not going to do the earnings call. Is this Apple? Oh, okay. I want to hear this really quick. This stock has been getting crushed.
Hi, Leslie. Hey, Morgan. Yeah, revenue coming in at $5.62 billion, beating estimates. Adjusted 55 cents per share on a diluted basis here, but Block processed $60.08 billion in gross payment volume in the third quarter, which was about $1 billion below consensus. I spoke with Block CFO Amrita Ahuja, who said that the high-profile outage of Square and Cash App in September contributed to about a 100 basis point dent in growth of GPV. So excluding that outage, growth would have been 12%. Ahuja also said that moderation stems from same-store sales growth moderation, which she believes is in line with broader macro trends, just the overall slowdown in consumers. Transaction-based revenue and subscription and services-based revenue each coming in a little bit light relative to estimates. Block, though, one of the reasons why you see that stock price up so high aftermarket is it's been touting its Rule of 40 goal, and today it gave some targets around that. Rule of 40 is the targeting of gross profit growth plus adjusted operating margins totaling 40% or above. So in today's shareholder letter, Jack Dorsey said that Block will reach Rule of 40 in 2026 with an initial composition of at least mid-teens growth, gross profit growth and mid-20% adjusted operating income margin. The company is also authorizing the repurchase of $1 billion in shares to offset a portion of the dilution from share-based.
Ooh, okay, so they're buying back shares. Yeah, this feels like the rally. Are they still SQ? Yeah, I think they're still SQ. Let's see what they're looking like. Oh, they're exploding. Look at that. Square exploding. And they've got destroyed. They've been getting destroyed over time. Over the past, 6 months, they've been getting destroyed. So you got Square moving up. A lot of good earnings here. I mean, goodness sake. This is going to lift the market. This is wave 4. This is wave 2 FOMO. Remember, wave 1 was the summertime. This is wave 2. We got a big retracement, which is actually really healthy, right? Minus 10%. We got a 10% correction in the overall market. And it looks like now we got the Fed pause and we got peak bond rates. And I think this is a wave 2 FOMO, Santa Claus rally. Who's this? Carvana? Ah, who cares about Carvana? I mean, that might be another short squeeze. Carvana, another short squeeze. CVNA. See what they're looking like. CVNA, ah, they look weird. They look weird. AAPL, what's Apple doing? Apple's slowly climbing. We might get hit. Anyways, Bukowski makes a really good point. Equal weight S&P 500 are doing better than the normal ones. That's good. That's market breadth right there. If you get the S&P coming in line. Hold on. I'm going to try to do something really quick. Let's see if this works. There we go. I don't know why it disappeared last time. All right, cool. There. So you can see who I am if you're on TikTok. I don't like talking behind a screen. Should read my face, see if I'm full of you know what. All right, so small caps are doing good. Well, yeah. IWM. Let's see what IWM's been doing in the past day. I'll just leave it on the charts until Apple reports, because once they do report, I can just rewind it by 10 seconds. It's not like we're getting anybody's trading after hours. So this is IWM. They're starting to rebound finally. I mean, they're down big. Don't get me wrong, but there's still companies in here that probably going to get exposure. Companies. Oh, this is the big deal, guys. Look at bond volatility. This is the MOVE index. This is more important than VIX right now. Bond volatility is starting to break down. Okay, So the bond market is now easing, collateral is easing, more liquidity should come in. We should be getting liquidity. If you're not familiar with what liquidity is, it is money supply, it is leverage, it is collateral, it is interest rates, and course coming. So you can understand liquidity. The three main factors are: what vehicle do you pick to invest in? What is the economic conditions? And what are the liquidity conditions, right? That is your speed. And, you know, they've been pretty bad. You know, global liquidity has been pretty bad, but I think it's going to start picking up now. Look at the VIX just get destroyed. This is also pretty optimistic here. The VIX breaking its uptrend. Who is this? Who just reported? Okay, we're still waiting. Tech in focus. VIX getting destroyed right back below 20. Couldn't stay above 20. I think too because, oh, Palantir. You're right. You guys already know I've been calling out Palantir for a while. Tesla on the rebound. Yes, Tesla is on the rebound. Palantir, Palantir is one of my top picks for an investment. It's been all year. I've made videos on it. It's Bitcoin, Ethereum, Chainlink, Palantir, and Tesla. Those are the 5 for this next cycle. Also, if you know any crypto people that want to debate cryptos, we can do that too. I like to do debates. If you get your feelings hurt, you're not going to like this channel because I'm not really going to hold back. I'm talking to the TikTok channel because those are mostly the new people. We're live on YouTube also if you want to see the actual charts a little more clear. I'm trying to show them on here to make the stream better. Where's Flare? Somebody said XOM. You could you could throw me your tickers, but I might not hit them because right now the goal is to first look at Tesla, or not Tesla, Apple. Yes, look at Palantir just soaring. Palantir is moving up pretty strong. I actually want to put it on this chart. This will be better. Oil is down. So Palantir, a lot of support at 14, right? A lot of support, big gap up. Look at that volume. That's what I'm talking about. That's big volume right there. Palantir likely breaks out above this. We're probably going to like 26. We're probably going to 26. Palantir is a beast. Number 1 AI software in the world. Number 1 AI software play in the world. Palantir. CLF moving up nicely. The whole market should be lifting. Should I invest in Bitcoin? Depends on your look. If you want to schedule a coaching session, I have it in my link in my bio. You can schedule a coaching session if you're interested. Because should you invest in Bitcoin? If it were me and I were new, it depends on your situation. But for the most part, I mean, over the next 12 to 18 months, Bitcoin will outperform NASDAQ and S&P 500. It'll outperform Apple. The only stock that can outperform Bitcoin is probably, I wouldn't even say NVIDIA. I think it's Tesla. Could be NVIDIA. Could be AMD. But I think Bitcoin outperforms. Ethereum definitely outperforms Bitcoin. And of course, as you know, Chainlink outperforms both of them. That's what I think, right? Based off my analysis going forward. So here we got. Where's Flare? Should I invest in Bitcoin? I'm definitely pro Bitcoin. That's one of my top picks. That's a trivial giving leverage though. That's trivial, Jeff. I don't even know what you mean. What do you mean that's trivial given leverage though? What do you mean by that, sir? Please give a good explanation. Tesla's such a good buy right now. Yeah, Tesla's a good buy. Look, Tesla's a good buy. Not financial advice, but Tesla's down big. They just got ripped. This is when you buy Tesla. When it's getting destroyed and it becomes oversold on the chart. Look at this. Extreme oversold. Okay, these are, if you're looking 12 months ahead, if you're trading, this is not trading advice at all. You got to know what you're doing. I hate when people come on and say, hey, should I buy Tesla? Should I buy this? Options. No, bro. You got to know what you're doing. Most people will fail in trading. Investing is easy. Investing is easy, okay? It's easy to invest if you have the right information, if you understand the business cycle, if you understand all this stuff, which I'm going to have a course out for that going forward. Or just stay tuned in the channel, ask questions, right? Learn as much as you can, get as much free content as you possibly can. Tesla will rip higher. Tesla's going to rip higher. There's a lot of bad news. It sells off. It makes big moves to the upside. It's like a crypto. It makes big moves to the upside and to the downside. The difference is stocks can still grow in a bear market versus cryptos is crypto really moves off of liquidity cycles and interest rates. That could change with the Bitcoin ETF because now you have IRAs, you have pension funds coming in, and now the volatility of Bitcoin comes down, but altcoins will still be cyclical, right? You have cyclical, you have secular trends. There's all this stuff. There's all this information. That's not the lesson today, though. So what'd you say? Meet Kevin. Palantir. Yeah, Palantir's a beast. What do you say? Move money into ARK Innovation ETF. A lot of grow fit companies very interested. I'm not a big on ARK. I like ARK. I'll watch ARK. Let's take a look at ARK. ARKK. I like ARK, but look at that big move by ARK. But ARK is, most of their movement is going to come from, here's what I'll say. I like Cathie Wood. I'm a fan of Cathie Wood. But a lot of her fund is based off lower interest rates. And right now we're not at lower interest rates. So I don't think her ETF outperforms as much as they own a lot of Tesla. They own a lot of Zoom. They own a lot of Roku. But with high interest rates staying elevated, I don't think she can outperform as well because they don't make money yet. There'll be big bets. It'll be volatile. Do I still hold Zoom? No, I got out of Zoom. When it broke the technicals and it just couldn't hold after earnings, I got out of Zoom. I've been out of Zoom. I cut my losses at like 68. Lost money on Zoom. So yeah, ARK made a pretty big move, 13%. I'm not a big fan of ARK though, like I said, until interest rates come down. It'll boom, don't get me wrong. ARK will boom, but not right now. I think crypto is by far. Oh, he quit. Oh, that's right. Polar Vortex, man. He's the man, but he quit on us. He raged quit because I was pro ARK and he said, Cathie Wood's a scam. You're promoting Cathie Wood. Oh my God. Anyway. Oh, so you said, so Meet Kevin says we get rate cuts in May. Look, it is very possible that we do get rate cuts next year because inflation, and I'll debate anybody on this, okay? Inflation is making progress regardless of what you hear. Unit labor costs are coming down, right? Wage inflation is not existing. Oh my God, there's wage inflation. No, there's no wage inflation. It's not accelerating. That's what I'm saying. Okay, is this Apple? No, that's DraftKings with the loss. Ooh, let's see what they look like. What is DraftKings ticker? DKNG. Okay, they got a loss. DKNG. Let's see if they drop. They might have just kept going up. Yep, look at, they still went up on a loss. This is why it's tricky to understand how the market works because you can beat earnings, go lower. You can miss and go higher, right? And a lot. I bet you my bet is, I haven't even looked at this chart by the way. My bet is DKNG has been trending lower when positioning is really underweight. Okay, when positioning is underweight, you could get a move the opposite direction. Let's see, are they trending lower? Yep. I mean, it's not that bad, but they've been trending lower. They're forming a pretty bullish wedge pattern here. So I guess they're not trending that much lower, but they're down big from the all-time high. This is a wedge pattern. This is important. Wedge patterns are the most powerful patterns in the market. They're more powerful in a bull market, of course. And this is what you're seeing here. Look, if you guys are new, subscribe to the newsletter. It is free information. It won't be free forever. Link in the description. I've been calling the bull market rally since October of last year, October, November. Last year, we said we're going to go into a bull market. So you could check with, my subscribers or the people who are on the TikTok. They know I've been calling for the Santa Claus rally. Now, in July, we had a bigger retracement than I thought. But I think we're back onto the, to the bull market rally. We might peak out at the end of the year because consumer spending is going to slow down. But that's why you stay tuned to the newsletter. It is free. Go check it out. Free newsletter. Link in the description. Okay. Also, go sub on YouTube if you want to know when I do come on TikTok because I go when I'm ready. So you're going to get the YouTube notification first, and you can replay the video to see what you missed. Okay. Whatever you missed. If you're interested. If not, whatever. Who cares? I throw out shorts also. Don't hold Zoom, Polar Vortex. If we get rate cuts in May, that's going to be very powerful crypto's going to rip if the expectation comes. Here's the problem. A lot of people are taught, wait till the rate cuts come. The market front runs rate cuts. It doesn't wait for rate cuts. Okay. We kind of got a rate cut today with yields dropping, 2-year yields, right? They didn't drop as much because they're more short term, but 10-year, yields, 30-year yields, these are mortgage rates, those fell. So I expect now business activity to pick up a little bit in the housing market. It's frozen, but when rates make a big move down, people want to lock in those rates. It's not going to be a big move though. Housing is still in recession or it's frozen for the most part. All right, where's Apple's earnings at? Okay, let's see what they look like. I think BTC passes all-time highs around the halvening. Possibly it really, listen, if interest rates get cut before the halvening, Bitcoin is going to launch. I mean, the ETF is tens of millions of dollars of inflows every month. They have to buy it, just like Palantir. Right now, Palantir, now that they've been positive for 4 quarters, they're going to be introduced inside the S&P. So, last time Tesla got inside the S&P was 2019. Stock exploded, absolutely exploded, because now, big firms, pension funds, big money has to automatically buy that stock by proxy of buying the S&P 500. So when they buy the S&P, the pension funds, you put a stock inside the fund or inside the ETF, whatever you want to call it, the index. Well, that's more buying pressure. So, of course, Palantir is going higher. Bitcoin is a small asset. It is so small compared to the S&P, compared to, it's a, 500 billion, 600 billion. So once the S&P once the Bitcoin goes into pensions, ETFs, hedge funds, it's over. Bitcoin is going to explode. I got a 150K price target at the lowest range. Once the Bitcoin, why? Because an upper target is much bigger. I got a much bigger upper target if rates get cut, if liquidity comes back, and I expect it to come back in a meaningful way. We're almost at Apple earnings. Let me get to the 1 minute chart. Sorry. Go back to the 1 minute, see how it's moving in after hours. It's just consolidating. We're not there yet. Dang, I thought it was, ooh, there we go. Look at, something came in. Look at that movement. Look at Apple exploding. Let's go. That's a good sign initially. Watch, it just goes back to 0. Dang, big move in Apple. Yep, here we go. Let's go.
In the conference call. So we'll be watching for that. The China piece is particularly interesting to me, given the fact that Huawei released its own high-end phone. We've seen it with other companies, some softness in China with the consumer there. And then, to your point, services.
Hold on.
Let's go.
The numbers.
Okay.
Hey there, John. Yeah, we got a beat on the top and bottom lines for Apple. EPS coming in at $1.46 versus the $1.39 Street was looking for. Revenues, just a slight beat here, $89.5 billion versus the $89.28 billion expected. That's down about 1% from the year-ago quarter, which was expected, marking, of course, that 4th quarter in a row of declining sales for Apple. And then let's just talk about iPhone revenues for a minute. Right in line with expectation, and a record quarter, Apple is saying, for the September quarter for iPhone, $43.81 billion. That's exactly in line with estimates, as I said. And services revenue, also super important, of course. That is a beat and another record for them, $22.31 billion versus the $21.35 billion expected. I will have more for you shortly, John.
All right, Steve Kovac, thank you. Now let's dig into these numbers, what we know so far, with Evercore ISI Senior Managing Director Amit Daryanani. He's got a 210.
Ooh, that's not good. Okay, got too excited. They missed.
And big technology founder Alex Kantrowitz joins us as well. Amit, first to you. Slight beat on revenue. Really, the bottom line is what's shining here. Is that good enough?
You know what? This may depend on what they say about the December quarter guide and what iPhone demand does in December, right? But so far, what I'd say, this looks pretty good, right? Services, it looks like there's a pretty healthy acceleration we're seeing to mid-teens revenue growth. I would also point out that.
Okay, you said it's not coming through the stream. Here, let me rewind this. It's gonna be here for a while. I want to hear this again. Let me know if it's gonna come through the stream. That's annoying. Hold on. I know what happened. Sometimes you have to it's annoying. All right, let me know if you guys can hear this.
Street was looking for revenue.
How's that working? Yeah, let's talk about this. There's going to be a lot of people bad. Yeah, that was bad. Banks are counting on retail buyers to buy Apple. What time is Apple earnings? What do you think about the gaps in tech stocks? About all the gaps in tech stocks? All the gaps? Luis, I'm not sure what you mean about the gaps. Like gap trading? Okay, that's good. All right, let's go.
Hey there, John. Yeah, we got a beat on the top and bottom lines for Apple. EPS coming in at $1.46 versus the $1.39.
Okay, so they beat top line revenue. That's good. The revenue's up. Right now it is tanking. Okay, it is tanking. Hold on. Let me see how bad it is tanking. It's tanking pretty bad. Scary, right? We'll see what happens though. It could be a sell-off and then buy the news. It did run up in earnings a little bit, so this isn't too surprising, okay? Even though it does feel bad if you're an Apple owner, it it's typically a psychological move. So they did beat revenue. That's positive. Let's see what their margins look like.
Street was looking for. Revenues, just a slight beat here, $89.5 billion versus the $89.28 billion expected. That's down about 1% from the year-ago quarter, which was expected, marking, of course, that fourth quarter in a row of declining sales for Apple. And then look.
Okay, there you go. So they beat EPS, but that's not what's most important. It's going to be revenue and margins. It looks like revenue barely beat. Okay, that's not bad.
Let's just talk about iPhone revenues for a minute. Right in line with expectation, and a record quarter, Apple is saying, for the September quarter for iPhone, $43.81 billion. That's exactly.
Okay, so iPhone did pretty well. Okay, everybody was doubting iPhone. That's not terrible.
In line with estimates, as I said. And services revenue, also super important, of course. That is a beat and another record for them, $22.31 billion versus the $21.35 billion expected. I will have more for you shortly, John.
All right, Steve Kovac, thank you. Now let's dig in.
Okay, that's what crushed them. Apple Mac revenue, they missed.
To these numbers, what we know so far with Evercore ISI Senior Managing Director Amit Daryanani. He's got a $210 price. And big technology founder Alex Kantrowitz joins us as well. Amit, first to you. Slight beat on revenue. Really, the bottom line is what's shining here. Is that good enough?
You know what? This may depend on what they say about the December quarter guide and what iPhone demand does in December, right? But so far, what I'd say, this looks pretty good, right? Services, it looks like there's a pretty healthy acceleration they're seeing to mid-teens revenue growth. I would also point out that some of the FX headwind, we think about 200 basis points, could be because of FX for them. So perhaps the beat is a lot better on a constant currency basis that they will flush out on the call. But so far, so good. iPhone demand into December, the expectations are going to be key to watch for.
Alex, are there any softer areas outside of the product numbers that you think are particularly?
There we go. Gross margins, 45 points. That's good. They beat on gross margins. Okay. So the worst thing right now is the Mac. I think this is a good report. If the market does sell off, if Apple does fall, they should bounce because this is not a bad report. Next, it's what do they do in China?
Important here. Trying to look through the geographies, for example.
Well, look, I think that the fact that they beat on services is huge for them. Now, of course, we're looking at, talk about softness, 4 straight quarters of revenue decline. That's not even growth decline, that's decline. And you need something to make up for that. So you look at services, right, which is basically if your stock is going to be up 41% on the year and you're going to have 4 straight quarters of revenue decline, you need something to make up for it. It looks like they're coming in very nicely on services. And of course, you know, like my counterpart said up here, I'm going to wait for the guidance and the call to really, you know, put my finger down on what we can expect regionally.
Okay, well, let's get back to Steve Kovac for more on Apple results. Steve.
Yeah, I talked to Tim Cook, Morgan, about these results, and we went over just some of the demand and some of these issues the guests were just talking about here. So let's just dive into what he told me about the iPhone business, which of course came in $43.81 billion. That's up 3% from the year-ago quarter. Here's what Tim Cook told me about the iPhone 15 launch, which we got about 8 days or 9 days of sales for this quarter. He's telling me, quote, we launched the new iPhone 15 family during the quarter. It's the best product lineup we've ever had for the iPhone, and we're excited to get those into the hands of customers as quickly as possible. It's still early, and the iPhone 15 Pro and 15 Pro Max are still constrained. That's key, guys, and we're working hard to get those out there as quickly as possible. Also followed up with Tim on that and Mr. Cook on that and asked him a little bit about the mix of iPhones and things he's seeing there. Wouldn't really talk too much about that or competition about Huawei, just reiterating a strong quarter, strong demand for the iPhone 15, and that those constraints they're seeing right now for those Pro phones, which are more important, more expensive, also telling me those constraints are due to just high demand for the products that they just can't fulfill yet. So that's kind of a good problem to have for Apple. And then I do want to dive into the Mac business as well. Talk to Cook a little bit about that. It's down 34%, guys, to $7.61 billion. That's due to some wonky comps after some production problems throughout the year they had in China last year. Here's what he told me about that business, though. Some optimism about the holiday quarter for Mac, telling, quote,
I think the Mac is going to have a significantly better quarter in Q1 in the December quarter. We've got the M3s, those are the new chips he launched. We've got the new products. We don't have the compare phenomenon on a year-over-year basis, so I think it'll be significantly better. So guys, a little bit more optimism for the holiday quarter, at least for the Mac side, but like the guests were saying just now, wait for the call to get some revenue guidance for that holiday quarter to see if they can return to top-line growth. Send it back over to you.
Steve Kovac, great reporting. Thanks for bringing it to us.
Thanks.
We're going to go back to the panel. Amit and Alex, shares are down 1.5% right now. Amit, I'll start with you.
Ouch.
I mean, a lot to digest there in terms of that Cook commentary, but starting with the iPhone 15 launch and the fact that they do seem...
All right, so it's going to come down to guidance, okay? Looks like they beat on... Let's go ahead and mark this down. They beat revenue, okay? Beat top and bottom line. Beat EPS. Beat iPhone, right in line. What else did they beat? They beat services, record. They missed. What did they miss? They missed on MacBooks. And they just came out with that new MacBook also. That new MacBook is the M4 chip, which is way better. I mean, obviously, they're increasing their product's quality while lowering the price. So that's pretty huge. That's probably why they came out with that strategically for marketing, which is let's come out with this new MacBook, make it more appeasing because we know we're going to miss on our revenue for MacBooks, right? So next is going to be, what is guidance? What is guidance? And you'll see the price react to that. That's what we're looking at here. Wearable, home, and accessories also missed. Is that what you said? Let me turn this off. Did we get Apple services revenues here? Let's hear this.
And, iPhone itself was just about in line as well.
Yeah, services is definitely a proxy for loyalty. It's a proxy for how active people are within the products and frankly, how much more money they're willing to give Apple and after making these big ticket purchases. You have these big flagship purchases that people are making, but making less frequently, something like the iPhone and something like the MacBook, right? They now have 1 billion people who are using services, and they need to make as much money as they can from them to make up from the shortfalls that they're gonna see from people upgrading much less frequently. That's a good thing. The products are better, but they have to see that revenue somewhere else. And you see this big, huge miss on MacBook and on Mac, and you have to make up for that somewhere. They did okay. They beat tremendously on services, but apparently that's not enough for investors. So we're going to have to see how this plays out.
Amit, I want to get your thoughts on that too. Active installed base of devices has reached a new all-time high across all products, according to this press release, and geographic segments. A new all-time high in terms of services revenue as well. We know the margins are better there. Is this a situation where as they continue to build that, focus on that, it's going to change that margin picture over the longer term? We've been talking about it for so long now, but iPhone always still tends to dominate the headlines.
Yeah, if you think about it, the install base is there because of the iPhone success, right? And so I do think that's the core of the Apple install base. It's crucial for that to keep doing well. And I think so far by all metrics, they're doing perfectly fine there. I do think the monetization of the install base is probably the right long-term narrative to have on this company. It all seems to be going in the right direction there. But I do think you want to make sure the health of the install base is intact. And the one way you gauge that is how quick are the replacement cycles, how quick are the refresh cycles. And again, September data seems like it's relatively decent across most geos other than China. We'll have to see if that holds up in December as well for them.
All right. Amit, Alex, thank you. Great to have you.
Thanks so much.
Bro, look at that. Cash pile 162. But you really think anybody's worried about that? Well, I wonder what their share buyback's going to be. If they buy back shares, just, as a principle, for those of you who are new to fundamentals, fundamental analysis, or just understanding the fundamentals, when a company buys back shares with that cash, they're eliminating the shares from circulation. They're removing shares, making the asset more scarce, therefore price goes higher. Is it always higher? No. There's reasons why that could be terrible, but in Apple's case, they have so much cash, they buy back shares, they make it less available. Also, their earnings per share goes up because there's less shares, so the current earnings gives more earnings to each share. Therefore, if they do a buyback, this is going to be sell sell the news, buy the rip in after hours. I still think they recover. We'll see how it does. Those are pretty good numbers. You said China. Somebody said China's numbers were pretty bad.
Shares down slightly right now in reaction. Up next, much more on Apple earnings, including what two shareholders make of the print and what they want to hear from management on that upcoming earnings call.
And don't forget, you can catch us on the go by following the Closing Bell Overtime podcast on your favorite.
Okay, cool. So we got that done. Other products and revenue. I want to hear, let's hear a little bit about this. This is going to be important. There we go.
Apple shares slightly lower right now in overtime after reporting earnings. Joining us now is CNBC contributor and Hightower chief investment strategist Stephanie Link. She's back. And Annandale Capital founder George See. Both are shareholders in the company. Stephanie, I'll start with you. There was a lot. There's a lot to like, and there's stuff to take issue with in this report, but there is a lot to choose from.
Right. So the quarter was kind of in line at the headline, right, in terms of a little bit better on earnings, revenues as expected, down 1%. You highlighted iPhones kind of in line, although I think that there were some expectations that they could do a 5 to 7% growth number. Looks like it was a 3% number. So not terrible, but I think expectations were a little bit higher. Services obviously is going to be the bright spot for sure. The Whisper number was 13%, so we got 15%. Clearly positive. I don't know what's going on with Mac. We'll have to dig into that. That's problematic. China does not surprise me at all, because that's one of the things that we've all been worried about. Huawei, competition, right? And then also the geopolitical issues. So we have to get more color commentary there. This really is going to come down to guidance for the December quarter. And it's going to be because there are some expectations out there that you're going to see them or hear.
Okay, there we go. It is going to come down to guidance. So that earnings call. Hey, whoever that is, DCF, you said you'd like to come on and talk. Just go ahead and ask to come on. Apple Q4 earnings, Europe 25%, America's greater, China 17%, rest of Asia. Okay. It's going to come down to that earnings call. What else do we have? Jervine, looks like you're keeping up. Thanks for the info. Company struggles with sluggish demand and shaky smartphone market in China. And I think China is going to be a little tough because of Huawei. They might be battling. They might be using that. Oh, you did? Okay, I didn't see it. I didn't see it. I didn't see your request. Hold on. Let me see. Okay, now I see it. Let's see how this works. Well, if it doesn't work, we'll see how it plays out. What's up?
Hi, how are you?
I'm good. How you doing?
I'm wondering, you're keeping along with this earnings, and I'm wondering, are you more of a fundamentals-based long-term investor? Are you a trader?
No, I am. I wouldn't say I put myself in any of those categories. So we have a guy asking. Well, I'm on live on YouTube also, so I'm gonna answer. Let them know I'm not fundamentals or just a trader. I am more of a position swing trader and also investor. So I do both. Right now, I'm positioned into crypto because I think this is the biggest upside, going from the bottom of the cycle to the top of the cycle. And then when it comes to fundamentals, I keep track of the fundamentals. I'm only going to invest in something or trade something that has great fundamentals. I don't just pick stuff up and trade it. It has to have good fundamentals. I want the macro in my favor. I want the overall market in my favor. And I want it to have a big total addressable market. And I want to use the technical. So I use all that, fundamentals, all that stuff.
I'm also in a similar boat, but I'm more of I'm a long-term investor. I'm not a trader or a swing trader or whatnot. I'm an investor, so I'm more focused on the long term. But I do use also fundamentals. But it seems like with this Apple earnings, this is the worst, quarter-over-quarter growth in sales since 2001 for Apple specifically, right? I mean, we're seeing, Apple's a massive company, so we're seeing sales trending downwards 4 quarters in a row. We haven't seen this in over 20 years, right? So this is very problematic in terms of, and I wonder what this will be for tomorrow. I mean, Apple's the biggest company in the market, so it does drag things with it up or down,
So let me get this straight. I know I'm trying to figure it out YouTube to see how I can get you guys to hear. So he said Apple had the worst. Yeah, I'll summarize the question. Basically, Apple had the worst quarter-on-quarter what is it? Revenue? What did you say? Revenue? What was it? iPhone sales?
Sales in general.
Sales in general, just pure revenue.
Yeah.
Okay, worst quarter-on-quarter revenue since 2001. Somebody go fact check that. Somebody go figure that out because there's different ways to measure it. Okay.
I mean, like not like one quarter to the other, but like how many consecutive quarters were revenues down?
Oh, okay, consecutive quarters. Okay, so he's saying consecutive. This is the worst quarter-over-quarter consecutive. All right. So
Right now we've had 4 quarters in a row where revenue is down.
4 quarters in a row. Let me answer you there. Okay, I have an answer for that. I think that this is what investors want to actually see because a lot of people, when it comes to fundamentals, what they're missing if you're just looking at fundamentals is that investor psychology matters a lot more than just what are the fundamentals, what are the technicals, right? You have to add all these things together. Now, what you want to add in here is, okay, 4 quarters in a row, the market's going to look through that and say, okay, are we at the bottom? That's all the market wants to know on guidance. Have we met the bottom of revenue? If you have 1 or 2 quarters of negative revenue, investors are going to be more cautious because they're like, damn, is there more? Once you get that many in a row, now you're measuring it versus the previous quarter versus the previous year. Those measurements get better because it can't get much worse unless a full economic collapse happens or something like that. So investors, I think, are going to say, is this the bottom of revenue? And that's why the guidance is so important. And I'm just looking at it like a rubber band. Right now, the whole S&P 500 is also leaving an earnings recession. People are like, the earnings suck for S&P. But if you compare them to the last 3 quarters, they're actually leaving a recession. The earnings are actually going positive on a year-over-year basis. So barely, but it's getting positive. And that's what investors, that's how the market works, is it looks forward 6 to 12 months. That's what investors want to know about Apple right now. What's going to happen in the next 6 to 12 months? Here's the positive. Okay, Apple has so much cash, 160 billion. Are you kidding me? That is so much cash. All they got to do is park it in the money market funds, which they are doing. They're going to park that in the money market funds, and they collect 5% interest from the Fed. They're the best position from the money market funds. They're going to get that 5% interest from the Fed funds rate. So the Fed funds rate being at 5%, 5.5 actually, 5.25 to 5.5 actually benefits huge cash holder equities like Apple because they can now yield more cash. So I think it's irrelevant when you talk about price in the next 2 or 3 weeks. The biggest issue is where bond yields. Those just collapsed. Those just fell. So what people, bond yields, that's the cost of capital for most companies is bond yields. Those are coming down.
Yeah, sure.
Yeah.
Are you talking about corporate bond yields or government U.S.
No, treasuries. My bad. Treasury yields just fell yesterday from the Fed. So what I'm saying here is there's more macro forces that are going to propagate Apple up because they can benefit from the high interest rates. And as much, they can benefit from that. They can financial engineer it. They have a lot of cash on the balance sheet. The real question is the price overbought? That's the real, is it too high? They have I think they just showed they have $160 billion in free cash flow. I think we just saw that. Let me see.
Cash itself. Like on the balance sheet, how much cash?
He got paused. Somebody find that out. I think there's 160 billion of cash. I don't know what happened to him.
Yeah, I'm just the cash levels of Apple. Yeah, I think you're right, somewhere around there. No, I mean,
There it is. Here it is. 162.1 billion cash pile, bro. That's insane. So they're not going to throw that all into the money market fund, obviously. But my point is, they have more cash. Their cash pile is bigger than most companies. So there's not really a concern for Apple as a company. The bigger concern is the macro. It all comes down to the macro. Is inflation accelerating? No. Are yields, are interest rates climbing? No. Is the Fed done hiking? Yes. Is oil really spiking? No. Right? So I think this is really irrelevant. Fundamentally, it's all about the macro right now. Now, obviously, if there's a big surprise to the downside or the upside, you're in trouble. But we don't see no big surprises. We're pretty much in line.
No, if you're longing this for, say if you're not trading this and you're holding this for some time, a quarter, yeah, you probably shouldn't be worried about what happens one quarter or the other quarter. But in terms of where the macroeconomic environment is and the outlook for the macro environment, I guess I would say that sure, interest rates. I mean, we probably have one more rate hike to go, but or maybe two more even. Powell sounded very hawkish yesterday, so we do have, but the borrowing costs will still be higher for a for a tremendous amount of time. I mean, like we're not going to be able to go back to the ultra loose environment that we were in for the past couple of years. So in this case, it is good for people, as you said, for companies that have massive stockpiles of cash. But I'm just wondering, in the long term, I mean, in the next few years or whatnot, the S&P 500 is overvalued significantly, right? And Apple's a significant part of it. And I'm wondering, will we see some sort of a correction, some sort of a discount? Because we really haven't seen, the employers, the employee and the labor force being hurt, and usually that signals a recession. We haven't seen a recession. The stock market, the economy's juggling along. Inflation is coming down, but I mean, core PCE is 4.1%, 4%. So inflation is coming down, but it isn't coming down at a considerable rate. So I'm wondering, do you think that the Fed has to break the labor force in order to get inflation down, which could cause a recession?
Hey, I love the question. I'm glad you asked that, because that's where people are I think this is where people are most misled and confused. Number one, okay, does the Fed need to crush the labor market to get inflation down? Well, has inflation been trending down? Answer me that question.
Yes.
Okay. Hold on. I get it. Not at the fastest pace you want, but it doesn't matter what you think. It matters what the market thinks, right?
No,
So
that's not what I think. It's what the Fed thinks. The Fed says it's not trending down. This is what Jerome Powell said.
also, okay, you're right. But the Powell, you're right. But Powell is all about expectations. So he said in 2021, we're not even thinking about hiking rates. He hikes rates 3 months later. So forget what Powell says. It's all, you have to take what he's trying to do, what she talked about the other day. He wants to influence the market to be tight without him. It's all a game here, right? So you can't 100% put your trust in what Powell says he's going to do. You got to listen to meeting after meeting. Is he getting more and more dovish? My point is, no, he wasn't. He was more dovish versus the previous. Okay, you're right. He's hawkish.
Very hawkish compared to what the expectations were.
Cool. You're right. But listen, you got to understand. Then why is the market taking off? This is what people don't get. Powell was hawkish and dovish.
I think the market is wrong for taking off.
Okay, that's fine. That's totally fine. And don't take my intensity as rude. This is just how I talk, bro. I played football. I played sports. We get intense. Okay, so listen. So the way I think about hawkish and dovish is versus the previous meeting. Was he more hawkish or dovish versus the previous meeting? Okay, he's been more dovish going meeting to meeting. He's been getting actually more dovish. Okay, so with his tone, forget the words. Nobody knows what he's going to do exactly. You have to listen to the tone and the words. There's a bunch of AI indicators that are showing that he's being more optimistic in his language and that he's being less hawkish over time. I have those charts. They're in my newsletter when I do send them out. And anyways, getting back to it, right? You said, because you said a lot of things, so I want to make sure I address them with the macro. This is very important for people to understand here. You're concerned with inflation. Look, let's agree on this. Inflation is the biggest concern for the market, right? The inflation is the biggest concern, but the question is it making progress? It's all about the rate of change, not the actual level. It's the rate of change. So you said also, well,
been upticking over the last couple of months, though.
We've been upticking. What are you talking about? Year over year, or month over month?
Inflation month over month, we have been ticking up over the last couple of months.
We did. No, we did. We did tick up on the non-core, not core. Core is not ticking up. Core is not ticking up.
So this is just CPI itself.
Yeah. Because it's taking in account oil prices. They jumped from 80 to 93. So the headline did jump on a month over month basis, right? But the year over year is not. The year over year was sideways. It went from 3.7 to 3.7. So now it's starting to roll over. It's starting to go sideways, and at the same time, right, it's moving sideways. Oil prices just dropped from 90 to 80. So the next print, you tell me, you tell me where it's going. Also, housing inflation is coming down. Vehicles inflation is coming down. That's 2/3 of headline, right? Now, if we're just focused on core, super core, those are all trending lower. Those are trending lower. So your issue is it's not fast enough. Well, I mean,
And this is objectively we can look at
right.
like the signaling from what Powell said yesterday. This will objectively result in higher expectations of inflation. I mean, the 5-year even it broke above the inflation. Inflation is now sitting at 2.5%, which is well above the 2% Fed target. Right. This is the 5-year break.
Oh man, he went on pause again. Hopefully he comes back. This is good. This is perfect conversation. Go ahead. Go ahead.
The break-even inflation, which is inflation minus the tips, right? That's at 2.5%, right? The Fed wants it at 2%, right? But it's at 2.5%, and this will be the driver of continued steepening in the curve. I mean, the curve has been steepening; it is unsteepening now. But this, so like by next year, right? By early, not even later next year, by early next year, the Fed will have to choose between two options: either doing whatever it needs to do to get inflation down to 2%, or accepting higher permanently, at least for the foreseeable future, higher permanent levels of inflation. And here's why I say this. The GDP report that came out, I think Monday, I'm not sure if it was last week, but I think it was Monday. It beat by, we were expecting somewhere, I think 2.3%, came in at 4.7%. Consumers are spending like crazy. I mean, the economy is juggling along, right? We're not seeing inflation doesn't tick up and just come right back down. I mean, it's like the market, right? I mean, it goes up, down, goes up, down. But so, I mean, the Fed next year it has to make a very, very hard choice of getting inflation 2% or just accepting a higher rate, right? That's what it has to do, and the five-year backs that up.
First of all, I want to say thanks for jumping on, bro, because a lot of people are not brave enough to jump on. I respect that 100%. What I would say also is that first off, inflation, let's go one thing at a time, because you said like 6 different things. So it's like it's going to be, we're not going to really get to anywhere. So inflation core historically, right, from 1982, core inflation has actually averaged 2.8%. Okay. Now, and just think about this, 2.8%. Powell says we need to get to 2%, but you can't trust what his exact words. I think they end up accepting higher inflation, 2.5, whatever it is, if we're talking core, okay? It's very possible it undershoots, but my point is there is no exact target. That's just to get you to be bearish, to get consumers to stop spending, to get companies to not hire too much, to get companies to slow down, whatever it is. It's also, he uses expectations, right? The Fed uses expectations to also get inflation down. The historic level is 2.8 when it comes to core. So that doesn't even align with historic targets, right? The other thing is I don't know, do you have an issue with inflation coming down? Because for me, inflation is falling.
So you think inflation itself is you think that it's just a, I guess you could say, I don't want to call it an illusion, but you think that it's a nudging, right, by the Fed to actually meet its targets. You don't think that getting inflation to 2% is the end. You think that it's the means to an end, right?
There you go. Exactly. He doesn't want the stock market to explode, but he doesn't want it to collapse either, because it is the collateral to the system. So he's going to undershoot the average, which is good. I think he's doing a good job. He's going to say we need to get to 2%. We could get there. Listen, the faster we get there, the more imminent we hit a recession. If we go slow, this is why people aren't understanding when it comes to stock market. The slower we get to 2%, the more stable the labor market, the more stable the economy. Which, what do you want? Do you want fast inflation? Do you want inflation to come down really quick, which is going to coincide with the collapse? Or do you want it to slowly trickle down while employment remains strong? Remember, their other mandate is maximum employment, and we've been getting that.
But I mean, you really can't do anything but laugh at what has transpired over the last, since I would say last 2 years, right? I mean, the Fed, you remember that era when they were saying this is transitory, and so forth. And then in a few months, we saw a shift from this is transitory to this is, the worst, structural inflation we've ever seen, right? And I would say, and I really have to say this, I've been really surprised at how strong the labor market has been. I've just been really surprised. I mean, the I thought the labor market would be broken in about 6 months.
Hey, mute your stuff, bro. Mute your thing. Okay, go ahead, sir.
Okay. Yes, sir.
Hold on, mute yourself first. Okay, go ahead, DCF. No, DCF, you're good. You're going. Yeah, so hey, this is a really good conversation, guys. This is most investors. They're bearish. Remember we talked about this. They're extremely bearish. DCF, you can unmute yourself. Most investors are very bearish. Here, let me flip this around, so at least you guys know who you're talking to. Most investors are very bearish, and they're getting caught off guard, right? They're waiting for that big collapse. It's not happening. There's a bunch of cash on the sideline. The macro, the macro is very scary. Things could downturn. Don't get me wrong. Oh, you're good. Okay. Look, I want to address the recession too, right? You said, I would argue that we've been in a recession. We're in a recession right now. It's just not a widespread recession. It's a rolling recession, I like to say, because in 2022, okay, and I have all the charts here. We show them all the time, but you're new, right? 2022, the tech sector shaved off 400,000 jobs. Like tech, Meta, Google, they all collapsed, right? They shaved off a bunch of jobs, but it was when they actually announced the job shavings are getting rid of all the jobs that the stock bounced. Why? Because margins are now up. Because okay, you let go of jobs. All right, cool. So we started with tech, and then it went into housing. Housing is frozen right now. It's not a deep recession. Housing prices are not falling because nobody's moving. But housing is in a recession, a mild one. Tech went into recession. Financials, banks, March 2023. What do we see? We saw the banking collapse. That should have been your recession. That was the deep collapse for the economy, but it didn't happen because the Fed stepped in and pumped $500 billion from the balance sheet and the FDIC to cover the banks, to cover the deposits, right? So nobody lost money. If those deposits would have got lost, well, we would be in recession because people have no money to spend. So the Fed really bailed out the regional banks, and that's why we didn't get a recession. But guess what? It's still rolling around. Manufacturing, if you look at the ISM PMI surveys, those are the forward-looking economic activity surveys, right? And if you're new to this, hey, I'm going to come out with all this stuff so you guys can read it, understand how it works. The PMIs have been negative. As a matter of fact, we got back up almost to positive last month, and then we collapsed back down to 46. So manufacturing is still in recession to some degree. Who else is kind of in a recession? Retailers are sort of in a recession. Some are doing good, some are doing bad. So you have a rolling expansion / rolling recession going on right now. That's sort of what's going on. And things are starting to recover, right? And I can counter pretty much anything that people throw out there because I track the macro, the fundamentals every single day. We've been in the earnings recession. Now it's starting to lift. Does anybody have any contention with that? YouTube, what I'm going to do is if you guys actually, I'm just going to keep it on YouTube. I'll throw the charts up and then, I'll throw the charts up on YouTube. You guys are also on YouTube, by the way. Go ahead. Nalu Pao, if DCF has nothing to respond to.
Hey, good afternoon, Jeremy. How you doing?
I'm good, man.
Nice. Sounds good, man. Sounds good. So I kind of joined the live too late, and I joined in. I think it's in the mid conversation, and I'm a trader myself, and I'm a day trader, and I trade I'm an option trader, right? I've been doing it for a while now. So technically, you guys was talking about the inflation that's going on, right?
Right.
Okay. And so you were saying so technically the market right now is in a bearish position, or?
It depends what time frame you're looking at, whether it's bearish or not. The market, okay, look at a recession, not a recession, but if you're going from all-time highs, the market is down 9%. It was 10% at the lows, this recent low. So basically, the overall market is up on the year. It's not if you track it from the year, it's up 30%. Nasdaq's up 30-something%. S&P's up I think like 15, 20. I'm not sure. I'd have to measure it again. But the market is up for the year. We're not in a bear market. This is not a bear market. This would be the longest bear market of all time. We just had a 10% correction. So that was a correction inside of a bull market. The lows were October 2022. We're not going back to the lows. So would I say we're bearish or bullish? It depends on the time frame. If you're looking at the last 2 months, well, it looks like bearish because the price action is down. But if you look at the overall year, we're still in a bull market.
Oh yeah, the overall, like you said, I'm totally agree with you, right? Overall, the market is bullish. However, it's just doing a little pullback, and then after that, it's gonna get back to all-time high again. It's
Right. Right. DCF. DCF. Go ahead and I don't know if he's attending to his wife again, but he did ask some really good questions about recession in the market. I guess, and we're watching, we have Apple up here on the, let's see, actually, you know what? I'll switch it to the chart so we can see if Apple that earnings call is on right now. I'm not listening to the earnings call. I'd rather have a conversation here, debate, but I will definitely, we'll keep track of the price action because that's going to show us what's actually happening. That's going to tell us what's actually happening. Were you at DCF? Anyways, did you have any questions, Nalu or Nula? Did you have any questions, anything that you're trying to figure out with the macroeconomics? I think that's where people are very confused and being told we're gonna collapse and go to all-time lows and this is the worst recession of all time.
I'm sorry, I had a phone calls coming in. Well, what I was thinking is, so from my opinion, right, I was thinking that was going to push the market up for the rest of the year, the way things were going. That is my opinion, but I don't know, maybe you guys seeing something further than I do. That would be great, but that's all I have for right now. Okay, well, the answer to that is the biggest, here, I'll just make it pretty quick or pretty simple. The biggest negative catalyst to the market have been rising inflation or a collapse in economic growth. Okay, neither of those have been since 2023. Neither of those are happening in 2023. You hear people signal it all the time, and that's why I'd love to debate because the data doesn't exist. Inflation peaked in June of 2022. It's coming back down.
Can you guys hear me?
Yeah, we can hear you, DCF.
Yeah, continue. Go ahead.
Yeah, so inflation peaked in 2022. Okay, it's coming back down, and it's been trending down the whole time. And the market really is concerned with, is inflation done? Is it going to reaccelerate? That's all it wants to know. It doesn't care. It'll react, but it doesn't need inflation to collapse totally because it also knows that if inflation falls really fast, that also means growth is going to fall really fast. So that's the key is you don't want to inflate. The market just wants progress. We're getting that progress. As a matter of fact, headline started moving sideways and then core started to drop faster. The month-on-month core, by the way, had the biggest drop. And if you want to go to PCE, which is the Fed's preferred inflation gauge, that is also dropping on the quarterly basis. It's at 2.5%. We got PCE prices the other day. There's a bunch of inflation data, and people cherry pick the data and say, oh, well, look at this. But they don't really preface it versus the previous month, year on year, or historics, right? So inflation is. Go ahead.
CPI to be a lagging indicator for inflation, right?
Right.
So they look at PCE, and that's what they mainly look at. And PCE is well above the target rate of 2%. It's at 3.68 for September.
Right. No, you're right. You're right. You're right. PCE is above. But what is the point you're trying to make? What I'm
trying to make is ultimately you're right. I mean, things are, in the beginning when this whole inflation thing, when it started in 2022, end of 2021, you saw how the markets reacted, right? Everyone thought we would head to a recession, and we really haven't gone to a recession, right? And so my thinking is that, the market will have to either choose inflation sticking around for much longer, either if they want some growth, if investors want growth, or if they want lower inflation, then they would have to accept necessarily lower levels of growth,
Hey, DCF, really quick, bro. Listen, what the when the Fed pauses, okay, the Fed, or you probably already know this. They're still pressuring inflation by keeping rates where they are, right? They don't need to keep hiking to get inflation down. It's pressuring at 5%. You're already pressuring inflation down, right? That's pressuring it down because the restrictive level is now, if let's see, if we go, let's say core is at 4%, inflation is at 5.5, then you have a 1.5%. Basically, you can call it a cushion, or you can call it a restrictive stance. 1.5% of restriction, right? So even if they hold, they're still pushing growth lower. Does that make sense?
Yeah, no, you're completely correct on that aspect, right? But the market is more concerned with everyone knows inflation, as you stated, has been trending downward in general since early 2022. So right, inflation is coming down, but the question is it coming down? There are two questions that the market is really pondering on right now. Two questions, and I think the second one is much more important. The first one is inflation decelerating as fast as we hope? That's number one. Number two is, will inflation reignite?
Right. And I think the later question is more important. Will it reignite? So here's my thing. What the hell? Because people keep saying inflation is reaccelerating. Where is it reaccelerating? There's only one point, because right now consumers are still spending. And by the way, you pulled up GDP. Well, guess what? GDP was strong in Q.
Yeah, no, the GDP I pulled up, I don't want to cut you off, but the GDP that I pulled up, this was just preliminary, right? So it isn't. They're going to give us the revised version of it.
No, I'm going to give you that. I'm going to set it up. What it is Q3 was very strong. Is that 4.9% was expected to be like 4.1. So Q3 was strong.
It doubled the expectations. It wasn't even a few points more. It doubled the actual expectations.
Well, the expectation was 4.1%. And it came in at 4.9. So maybe you're talking about annualized, but third quarter, it's really tricky to read it. All I know is 4.1%. I can pull up the charts on watch. Let me pull this up on TikTok so you guys can see it. So yeah, you're right. GDP Q3 was very strong. But the and guess who was tracking that? Fed Nowcast, right? They said it would come in at 5.2, 5.3, and it came in at 4.9. So they were pretty close. Now, guess what they're tracking in Q4? The projections for Q4 are 2.3. So what I'm telling you here is it's not coming from the consumer, because the consumer is projected to spend less in Q4. Okay, they're projected to spend less. So if there's an upside surprise, I'm wrong, consumers spend more. So it's not coming from consumers. Number two, where is it coming from? The only way that inflation can reemerge is if oil prices start to spike. They have to spike. And we did get a small spike to 93, and then it rolled over, right?
Let me get into that.
Yeah.
And this isn't a really mainstream. It's not mainstream yet, right? It's not yet, but it will come on the mainstream aspect, and it has been over the last couple of days. But you're absolutely correct. I mean, with the situation that's currently going on in the Middle East, right? Geopolitical risks are actually also being priced into the U.S. Inflation levels, right? I mean, in the last 7 trading sessions, which was for when Israel said we're going to Gaza, the ground invasion happened, when they said the ground invasion will start. The 5-year break-even expectation rose from 2.1% to 2.33%, right? And like, while this is mostly contained in 2023, right? It's the next, what do we have? 2 months until 2023 is done with. So it's just the next 2 months that they're expecting some moves within the energy market and whatnot. But I mean, even yesterday with the ECB's meeting at the European Central Banks, I mean, Lagarde pointed this out too, that this geopolitical risk could be a upside factor for inflation, and markets have taken note, right? Markets definitely have taken note, and they will take note with this. I'm not saying that this will lead to energy prices skyrocketing, but I'm saying that currently, as it seems, with inflation break-even expectations rising, it seems like the market is saying there could be a risk. They're not saying that this will happen, but the market is saying there could be a risk of geopolitical tensions actually having an effect on inflation.
All right. Hey, no. You're right. But those risks will materialize in the price of oil before anything. It doesn't matter what people think. the oil price will reflect that risk immediately. Markets react much faster than what people, they react way faster than what people can kind of factor in. So the price tells you right away what's getting priced in. Right now, oil prices are not factoring in higher oil. I mean, they're not factoring in higher oil, or they're not factoring the geopolitics being that bad, or else we would see the price continuously spike. Historically, the Middle East hasn't been that bad, right? The Middle Eastern wars hasn't really, like, there's a chart I have where it shows most of the wars, invasions, nothing happens, right? Nothing really happens. The problem with Ukraine is we were hiking rates at the same time, and that spiked oil because Russia was sanctioned. So who's getting sanctioned this time? Nobody. So oil will reflect that, and until it does, the market's going to stay bullish until that actually reflects. So you are right on that. I wanted to show you GDP really quick. The last quarter, Q3 GDP. What you were looking at was the previous quarter. So Q2 was 2.1%. It more than doubled. But
quarter over quarter, you're looking at annual. Okay, yeah.
But the consensus was 4.3, 4.1, whatever. Consensus was still 4%. That was the estimate. The estimate was 4.3, came in at 4.9. So it wasn't like great. It was still hot, don't get me wrong, but it wasn't insane. That's not a bad thing as long as productivity is picking up. As long as production picks up, you want a strong economy. You want strong employment. Everybody thinks you have to collapse the employment market. No, what you don't want is growth to accelerate without production of services and goods also, unit labor costs, right, coming down. And we got that today. Unit labor costs are down, which means inflation is mostly demand or supply side. If there's too much demand, you have inflation. If there's not enough supply, you have inflation. But right now, what we're getting is demand is coming down. GDP fourth quarter is revised down to 2.3%, and the supply is actually going up. Unit.
I would have to disagree. I really would, because, and you said, we don't have to break the labor market, and I agree with you, right? That's not the ultimate goal that we should have, but it is the outcome of bringing inflation down. But with how strong the consumer has been over the past couple of quarters, and ever since inflation started to increase, it surprised me, it surprised market participants, and it surprised the Fed also, right? So, and I think the market, right, the position you're taking is also the position the market is taking, right? And here's why I say this. A month ago, right, we had our meeting yesterday. So a month ago, it's the 2nd of August, I'm sorry. The expectations for yesterday's meeting were 38, I guess you can say 38%, well, actually 40%, that the Fed would keep inflation where it's at. I'm sorry, keep rates where they're at. Right now it's at 20%, right? So the market is taking your position, right? And I guess you can say the market thinks that Powell was dovish. As I was listening to the meeting, I took it as hawkish, right? But as you outlined, it is more dovish than the last meeting. But in general, I took it as much more hawkish than market participants wanted, right? So, I do think that if we want inflation to come back down to 2%, we're going to have to break the labor market. I don't think we can achieve, and it's not something I want. I really, it's terrible. I don't want people to lose their jobs. But if we have to get inflation back to 2% with how strong the labor market has been, there has to be, some people have to lose their jobs, right? A lot of people.
They are though. It's happening. People are losing their jobs. Like it's a roll. Like I said, it's a rolling recession. You're losing jobs in certain areas. Like housing, people are struggling when it comes to the housing mortgage market. But the apartment market is at an all-time high builds, right? The builds for apartments are exploding, permits, because there's a shift. Interest rates are too high, so there's a shift to non-interest rate housing. So you see what I'm saying? It's a rolling recession. You're getting the labor market loosen and ease in certain areas and then pick up in others. So this is the perfect scenario for the Fed. They're literally threading the needle, and it's never really happened before. The trick is, like I told you, the reason why is the QE. We've never had quantitative easing, instant QE. People don't get this. And I'm not trying to trash you or anything, but think about this. QE never existed. There was no Fed balance sheet steps in and saves the market. We had a banking crisis, bro. That was the employment collapse. But guess what? The Fed stepped in. That's what I'm trying to say. The Fed stepped in, and they gave, they basically put all the deposits on their balance sheet, which they're just going to keep doing. So you didn't get a full rollover. Now, again, you said, okay, well, we have to get to 2%. We have to get to 2%. That's just an expectation, right? Just the Fed sets expectations, and maybe we never get there. Maybe we do. I think if we get there fast, yeah, something's going to break. We'll see the employment numbers tomorrow. We literally get those tomorrow. Something's happening with Apple. They're selling off on the conference call, by the way. But anyways, do you hear what I'm saying, though? We did have a collapse.
So to wrap this up, how many more hikes do you think we have?
They're done. I think they're done. I think they're done. I think they're done because, Apple's getting crushed. They're done until because they also said that the bond market is hiking for them. So the bond market is really the real interest rate. That's what they want to get. The bond market here on my stream, I'm showing it. The 10-year yield, 30-year yield, whatever you want it. This thing is at 5%. It's been climbing tremendously.
Okay, go to March. If you can go to the 10-year, go to March when that banking crisis happened.
Right here, right here.
Can you zoom in on that? I think it was March, just early March. I think it was early March.
Let's go to the 2-year. Let's go to the 2-year because this is kind of like the Fed. This is kind of what the Fed tracks the Fed the most.
The 10-year is what mortgage rate. I'm sorry, not mortgage rates. Corporate bonds and borrowing rates generally, consumer credit cards and auto loans and whatnot. They're followed by the 10 years. So I'd say it's better to look at the 10 years. But yeah, during March, the 10 years, as I understand it, the yields drove really high, right? And we didn't see any much really. We didn't see that we didn't see the banking crisis in March. We didn't see that. I expected it. I said, this maybe could do the Fed's job, or at least some of the Fed's job. We didn't really see that, right? I mean, credit freeze.